Hello, hello, hello. Good morning, everyone. Mike Arnold here, co-founder, Pat Trading Partners. So, how is everyone doing? Good morning, Wavy. Good morning, Sashi. Good morning, Options 22. Morning, Davy. Morning, Wavy. I already said that. Morning, Abraham. So how is everyone doing? By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, hit the like button, leave some comments. A big shout out to Sterling, who left a wonderful comment on yesterday's sector overview. If you haven't watched that, you should watch it to prepare yourself for each trading week. So, in the news today, factory orders coming out in just under an hour, and that's really it today. So nothing much there. FOMC still about 73% chance of a 50 basis hike. I think that's already baked in. Uh, the gamma exposure right at the pretty much neutral area. I mean, slightly positive, but what I'm watching for is if we do get those buy signals stay and there's a sloppy setup on the S&P, it just takes it into further positive territory, which doesn't mean you can't rally. It just has a slight dampening effect. It doesn't really start kicking in until you get above 4,600, 4,650, and then it starts really kicking in. So you could still see some pretty decent rallies. Good morning, Sterling. Again, thank you, Sterling, for that great comment on the video yesterday. Good morning, Jake. I know everybody's abuzz with Mr. Mother, not quite 10% yet, 9.3, I believe, has everyone on their toes. Completely disagree, Davey. I'm not going to comment on that more. Interesting, though, here's my comments on Twitter. He filed his form 10 days late. It's going to be interesting. He filed his 13G 10 days late after delivery numbers came out this weekend, and my delivery numbers were based off the initial and even first revision of what people thought they were a miss. Again, it was 325. Now his 10G comes out 10 or 11 days late. I think he had to file it by the 24th, and he files it again today. So that's going to be interesting with the SEC. And he also filed a 10G versus 10D saying he's taking a passive stake. But on March 25th, he put out the Twitter poll, about free speech and should he start a new platform? What do you think about, all that Twitter stuff? And then he files a 10. So he's already been an activist on that. And it's going to be interesting because then he should have filed a 10D versus, a 13D versus 13G. So it's going to get interesting. He's going to, and especially, it doesn't matter what he filed it late. So it shall be interesting to see if anything comes of this or if he's still immune to all securities regulations and laws. Yeah, another SEC violation. I mean, this is just, and he's already gone to try to get his old thing overturned. It's just, I just hope, and this is my big frustration, because then why even have an SEC? Why have securities laws? Because they enforce it on little people. They enforce it on all these rules and regulations with audits and everything else. But then you can just flaunt the rules. I guess if you're big enough and have enough money, you can just flaunt the rules and don't have to even file the correct forms or file them on time. So that's all I'm going to say about that, Lauren. I mean, I think there'll be a gap fill opportunity in Twitter once all this dies down. But let's take a look at the markets because it's already run away pre-market. So could it continue? We'll peek at it, but I will watch eventually for the gap fill on that. Because again, if he wants to have an active stake, he didn't even file the correct forms to take an active stake, which then you exceed 10%, it could get very interesting. So let's see, S&P, here's what I'm watching. We talked yesterday in the market overview yesterday about I'm watching for some buy signals. And this is actually getting, unless we have something drastic come out, we could actually see some more upside price action. Just longer term, also remember, even though we have long-term sell signals in, we closed above the 62.5. So we could easily see a retest of this higher areas or even a retest of last week's highs. Would not be surprised. We would get a daily, we would get a shorter term buy signal. Let's see, above this. I'm watching this head and shoulders. It's a little sloppy, so I'm taking the uh, targets with a grain of salt, but they are 45.76, major target 45.89, then 46.02. So on a rally, breaking through here. I'm really watching not even for a break of the neckline, for a break of about 45.53 area. You see we have a harmonic there. Here's your declining neckline. Oh, this is where again, these targets might slightly shift where depends where we break. I roughly have them breaking in the first hour. And then if you want the overnight, let me get back to the anchor point. I had to draw that without my anchor points. The intermediate levels are now about 45.62, 45.69. So these are all the key levels I'm working with for an upside breakout. What would change that is if we start breaking down below 45.30. We start breaking down below here. Should have moved the wrong one. Then we go into this little mini clear path, and I watch for a retest of some key areas from Friday's little sell-off. And based off the rally so far, see, it's really, I'm going to bump that down, really starting below about 45.26. Catching possibly 45.20, but below that, then I'll definitely watch for a retest of the lows. But right now, price action basing here still with very little news out, unless some headline news comes out, still favors an upside breakout during the trading session. Now, it could be with an upside breakout, still could be in choppy mode. Unless I see some strong momentum bars, also 4-hour rotation zone. You know, even if we follow here, it would be actually a better with a slight little sell-off and a rally back would even make it a cleaner head and shoulders on the 4-hour, but there's no guarantee we'll get that. Really above this 4-hour rotation zone, you really get to kick into this higher area, and you see the clear path up here. You see it on the 1-hour. You have an advanced clear path up here. So we have higher price action, strong possibility for higher price action. You're into the daily rotation zone. Even with a pullback, if we did get the bigger pullback, we're still in short-term bullish mode. Nasdaq, there's no real head and shoulders pattern on here or anything. We've already gone through those harmonics with the next pullback. You don't get a lot of traction, and then we have a sloppier pattern here on the Nasdaq. So that's where I'll focus on 14,965 for stop raise. Major target area, remember the return of this 50% of this sell-off and a new harmonic. So 14,993 to about 14,997. Right in front of that 15,000 number is my key levels. Above there, see, then we have another pretty significant stopping point right here, a big rotation there. This is where the difference between a clear path and different rotation trades. So again, if you're playing along at home, this would be another area to take an action. What is an action? Either partial profits if it was a pullback add. If it was just you're riding a position higher, definitely a stop raise. And then a very key level, 15,065 to 76 right in here. Start getting at least a 1-hour close back above here. Really start focusing on the return to the most recent highs. And remember, nice 3-day pullback into the rotation zone. So going to keep an eye for some longer term buy signals. And by longer term, I mean they're swing trades still. They're not like long-term position trades hold throughout the rest of the year. They are still short-term swing trades. Dow really not doing much. Basing here, this actually might also form a inverse head and shoulders. And when I was talking head and shoulders before, these are all inverse head and shoulders because they're reversal patterns from this down move. It'll be interesting to see, you know, with a push up here, it's sloppy on the 1-hour, but again, it's just a break. I'm really watching a break above this 34,800. We hit 34,852 stop raise in the 50% level of the sell-off, and then another stop raise would be 34,900. A significant target for me is right around 34,965 area. right in here on a, that's not just for today, that's for any multi-day rally this week. Russell, we have the sloppy double, which is confirmed and triggered on the 1 hour basis. So again, you got to watch for potential stopping about 2100. So that would be the first area I'd raise a stop. And then I'd raise it again at 2103. Targets 2109, 2116. And that's into a clear path right here. And on both those targets, even before the breakdown zone. DAX sitting here in sort of a consolidation at the bottom of the rotation zone, still holding about the 50% level, which is what I talked about last week on a return here. If it starts really breaking below here, watching for a retest of 14,200, which would then be a, if it breaks through there, a shake and bake pattern for a quick potential move to about 13,950. So I'm keeping an eye on that. Crude, we had this sloppy double, which turned into a blah, blah, blah. I don't even know what that is. But it essentially this morning was a horizontal channel breakout. Funny enough, reacting to this first target enough. And if you're doing horizontal channels, you know, there's two ways I watch them. I watch the extremes and then the candle body areas, but I'm not using those as targets. My first major target is about 103.72 on this move up. But remember, we are in a larger consolidation phase, trying to break down from the triangle and back in, which is why I hate triangle patterns, because every little stopping point is in the way, keeping on that 50 on a closing basis. So you see, I'm just watching really for a return to the middle of this triangle. And by the way, this is now will probably be a redraw down here. So it just expands the triangle pattern, which is why I hate them. There's no major statistical advantage to trading them, but I will put it up there for people to follow along at home. Otherwise, we have some cycle momentums bottoming. So again, these are short-term little plays. There's no long-term bullish play until, you know, we possibly get above 107. We could see a pop-up. Long-term bullish, I need it above 116. Gold in consolidation, nothing to do here from my perspective as long as it's in here, because there's no even great levels to trade around the core position until we get another push down or another push higher. Silver, roughly the same thing. Now remember, these are both in longer term head and shoulder tops that have hit the first and second targets. Notes, still watching even after this pullback. Remember, we triggered that double last week, hit first and second targets, pulling back, and it actually looks like now a double within a double. So even with the conservative targets here, you see right in there. So another push up. Major longer term, I'm still watching for 123.09, but minor, and this has not triggered yet. Still watching for a trigger on this. You'd need a close above, at least a trade above 122.09 and a half. Above 122.13. And then a close above there gives you the better trigger on a 4 hour basis. Let's see how that looks on a 1 hour. Use the 4 hour basis. If you're waiting for a close, a break above that would be more aggressive. Than you have 122.22, 122.26 and a half, 122.31. Dollar index. Dollar index still in this just horizontal channel. So key resistance about 99.29. Key support 97.87. VIX, nothing much going on. I'll start paying attention to the VIX of starting to get a move above 2150. Then I start getting a little edgy about a continued rally if we start breaking above that with momentum. Other than that, nothing going on there. Let's take a look at some other stocks. I know you got the Tesla with the delivery numbers, pre-market slightly up. Again, I am technically watching for another push higher, and that would complete a really nice 5-wave pattern on a shorter time frame. And we're in this, I reviewed this yesterday, in this little flag pattern, so I will be watching for a potential break with some momentum above there, especially if the Nasdaq stays strong into the open. Well, again, what changes everything? If we start breaking below, really below the bottom of this flag channel, but I'm really watching the key low from the 28th, we get below there, I'm starting to more aggressively target the gap fills. And from educational purposes, at least if you're trying to play this whole run up and you're in lower, I would be looking to lock something in if you haven't already below that. Again, educational purposes only. I don't know your time frames and your account and your risk. So, but that's what I am watching for. Let's peek at Twitter, of course. Twitter, I gotta zoom out because we're up to 48. So we have almost a 20% little bump. Again, key levels, if it still rallies into it, I will be focused on the 200. And eventually I'm focused on, but not really today, on a gap fill. Longer term I am. Weekly, you see here that we're sitting at that 50 week. Now again, that 200, let me just, if you're looking to play this, this is a very key area on the weekly, about 51.75. You look at that on the daily, you have the 200. You have this key gap open reversal. You have this little support shelf. It did break below it a little there, but then retest, and then that was the move up. So this is a very key level. If you're looking for intraday plays, would not ignore that level. Or if you're already long it, this would definitely be an area I'd aggressively raise up a stop. Okay? Because we could easily see a push up into that area. Then I will start watching for a potential topping pattern or rollover play, and I'll start doing my gap harmonics with that. Let's see. The SEC is long Tesla. Whatever that crude, yes, it's triggered again. The crude sterling is just a very short term play. This could even just be an intraday play. Coming off this little 50 basing pattern, you do have, it did get into a percent B. There's a percent B buy technically if it closes above the daily, but I'm not playing that on a daily basis. It's more something that I was watching for an intraday thing with this channel breakout. By the way, if you're watching for a pullback play in crude, the pullback play with your rising 1 hour rotation zone, even pullbacks between this area. I'm just, again, teaching something here. You see this zone here was your breakout area. Candle bodies to the peak at 101.51. Your pullback area, here's your other key support with the rising 1 hour. So even if it turns around, I doubt it pull back all this way. But even on a little short-term pullback, I'd watch for a turn back up because it could be a little continuation play with a tight stop. Good morning, Geo Mission. Triangle patterns are dangerous because they really lend themselves to confirmation bias. Yes, they do. And again, I spent forever in the 90s because I was like, triangle patterns have to be a great pattern to trade. I have not been able to find a solid statistical edge. Okay? Not been able to. Worked on it. Again, you know, if it's ascending or descending, they have a 1 to 2 point shift in probabilities. But when you have this kind of sort of symmetric triangle, it's nearly 50-50. So what does, and here's my other challenge. If you break, like remember, here was the initial. It broke, caught on a harmonic. Even if it broke lower, you look at a lower time frame. You see here was the key area. Here was this little breakout with little double before. Breaking down and catching on this resistance becoming support. That's why it's so hard to trade these also. Because, okay, you broke down from the triangle, but then it hits this area. And then it reverses. So triangles, even a break above this upside, look at the stopping points. So you start breaking above here. Let's say it takes a couple days. You break above here. You have a stopping point here. You have stopping points here. It's not great trading. People are hooked on triangles, and it's really challenging to trade them, and it doesn't give you a big statistical edge. That's why I'll put it up here to keep an eye on it, but you're better to trade within, you know, key levels within and watch. Even a lot of people get suckered by triangles, and there's some great reversal patterns when it sucks people in and then reverses. That's my little take on that. Ethereum US dollar had triggered a nice weekly double bottom, and there were several good short-term scalps over the weekend. Yeah, again, we'll look at cryptos. I've had these up for a long time. Here's Bitcoin, again, basing off that trigger on the big double here. Pausing, still about 44,570 is even a key pullback area, and it could move higher. But you do have a lot of overhead resistance at 50,638, so that's an area I'd be looking to raise a stop ahead of time. Ethereum, also you see triggered at the end of 2 weeks ago. And then last week followed through. And now we are getting a slight topping pattern with divergences. So I'm really focused on this daily rotation zone with a pullback to the breakout area. And then first minor pullback area, if you're looking to trade this, first minor pullback area is about 3,400 to watch for another rotation back up. As your targets are 37.77, 4,023, and 42.69. And that's about it. Thank you for joining me. Let's see later today how much stuff my lights up with my Twitter comments now, since now it's going to be Twitter and Tesla. Oh boy, this is going to be fun times. Again, let's just peek back in to see right before the open what's going on. Nothing really, just consolidating before the open. So again, 45.53 area is key on the S&P, Nasdaq. It could even a slight rally into the open, but I'm really going to focus on this 49.29. Let's just pop out a bit. Yeah, it's really got to get above here before I start getting aggressively bullish into the day session. Twitter, new Tesla, boom. Yeah, we'll have to see if it goes to the moon, and start watching the options in Twitter. Maybe maybe we'll get some gamma juicing in there too now that Elon's involved. You're welcome. I'm glad you enjoyed the morning session. You're welcome, Sterling. By the way, all right, afternoon session again, normal time today. Nothing changes. Just to let people know, Bob again won't be on tomorrow afternoon, so you'll just have to deal with me. He'll be back Thursday. I might have an interesting time on Thursday. Might have to run out early, so we'll have to see about that and how that shakes out this week. Other than that, everything should be normal. Have a great trading day, everyone. Talk to everyone later. We'll take a look at DWAC this afternoon, so we will take a look at that. Remind me, Sterling. Bye for now.